1,500 pips move on USD JPY. Bank of Japan intervention in the foreign exchange market. What's next? Japan is the third largest economy in the world. Of course, the first is the United States, which has 23.93% of the global economy, followed by China, which has 18.45% of the global economy, and the third, Japan, which has 5.14% of the global economy. Now, Japan has maintained above 2% of its inflation rate, which is commendable. Also, in 2022, the yen depreciated more than 40%. Of course, it is a case of less is more for the yen. The Japanese operate a negative interest rate economy, so their currency is inverse. It is because of their economy is an exporting country. They want prices of things to be cheap for foreign investors. All right. In the past, the Bank of Japan has been intervening in the foreign exchange market to value its yen downwards. So if it starts going up, it's like a circuit breaker to push it kind of downward, or they buffer it. The Bank of Japan push it downward so that they will have more foreign investors, which is good for their economy. So this is called currency depreciation. Now let's look at some effects of currency depreciation. Goods from abroad become expensive, which reduces consumer demand. Okay, so of course they are an exporting country. They want to discourage imports. They want to discourage imports. So if goods from abroad are very expensive, consumer demand will be very low. So it means that goods made in their country will become cheaper for foreigners, which stimulates export. Of course, they want that to happen. The more export they do, the more their trade balance increases, which is good for their economy. So, talking about trade balance of Japan is inversely related with the USD JPY pair, which is going to be our case study for this talk. Okay, so the trade balance of Japan has hit a record high of minus 150 billion, and there's also depreciation in the yen as we've had so far. Okay, but this time around we have the trade balance going the same way at par with the Japanese yen. So the Japanese yen is depreciating, and we still have the trade balance still on the negative, which is not supposed to be. They are supposed to be inversely related. So let's look at imports and the energy crisis. In the late 20th century, they invested heavily in nuclear power plants. Of course, the Fukushima nuclear disaster of 2011 raised safety concerns, and all their power plants had to be closed down. Some had to be reopened, and the one reopened could not even fulfill the quota needed for their reliance on natural gas, of course, which is half of their energy consumption. Okay, and 93% of its energy needs, that's in Japan, is in the form of liquefied natural gas. And also, we now have large imports from raw materials from big companies like the Toyota, and of course, these things affect the prices of their products. So, imports have a large way of increasing prices of goods and services in Japan. Interest rate hikes. The Federal Reserve of US has been hiking interest rates recently, making the Bank of Japan to spend about 20 billion out of its US reserves in September, intervening on the US on the yen pair to push it down from 145.840 to about 140.66 levels, dropping it to more than 500 pips, which I'll show you in the next slide. Okay, so let's see. Now this is a chart of USD/JPY. In 22nd of September, we can see this area that's orange in color. We can see a massive drop of about 500 pips. Can we see this? It's about 500 pips. So we have this about 1.4501 145.901 to 140.346 level. So it's about 500 pips drop. But look at what happened. After some time, we have it going back up. From the next day, it kept going. Okay, let's look at another chart. About a month later, we now have another drop. On the 21st of October, we have the USD/JPY dropping from 151 levels to 146 levels, another 500 pips drop. Okay, so how do we get this 1500 pips drop? Now let's combine the two charts together. Now look at our 150.775 level up there, and we now have this level 146.129. Okay, that was the first drop. The second drop, sorry, that's at October, 500 pips. Now if we go back in September, we now see that it dropped from 145.571 to 140.66, the same 500 pips plus drop. So, and if you look at this chart very well, the September drop, you can see that here it took about how many days? Can you see? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You can see this candle now. It took about 14 days, 2 weeks to go past the previous September levels. Are you seeing what I'm saying? Now we now have the USD/JPY trading between 150.775 and 146.129 level. If it took 2 weeks for the September intervention to be surpassed, how much do we need to drop this? How much intervention do we think Bank of Japan will do? Okay, so let's look at another scenario. If the Bank of Japan will go down again another 500 pips, okay, can you see the level, this black line now? Okay, let's say it goes down to 135.323 level. That's another 500 pips. How many weeks will it take it to go back up? Can you see? Now if we go down lower again, 130.444 levels, another 500 pips. So it only means that they have to go down about 1500 pips in order to keep this intervention going, so that it will work for some time, unless we have a weakness in the dollar. If there's no weakness in the dollar, the Japanese government, the Bank of Japan, have to do serious work to push it down. Okay, they have to push it down. We're expecting it by tomorrow, 28th of October. They say they're going to push it down. Let's see how much. Well, right now dollar is weak. Dollar is weak, I guess because of the midterm election and so on. Okay, this is what we're anticipating. There is a possibility that we may have more than 1,500 pips drop, based on what we've seen so far within September and October levels. Of course, 2 weeks to take out that high. What do you think? This is what we're anticipating in the coming days. Okay, let's see how this plays out in the coming days. Check out tomorrow on your charts and let's look at it together. I think we'll update this video next time. Let's see how it goes. All right, catch you again next time. See you. Thanks for your attention. Open an account with Tradeland FX at www.tradelandfx.com and you'll be glad you did. See you on the update.